Hi, this is Bob Iaccino coming in from the CME Group trading floor in Chicago. Talking equities, S&P futures, we'll look at those. The streak ends in the S&P. 7 record closes in a row is the longest streak since 1997 in terms of the closes. And 6 record highs in a row, rather, was the longest streak since 2013, and that ended as well. We were a little bit lower after the non-farm payrolls number. Now, looking at the payrolls, the headline payrolls number missed. So that's really what drove the market today in terms of the behind the data stuff. We were down 33,000 in the headline number, and nobody really had that. The range for the estimates that we had was one of the biggest I'd ever seen, for all the way from down 4,000 payrolls all the way up to positive 148. We haven't had a negative payrolls number since 2010, so the longest stretch for the last 7 years, every single month was positive, whether it missed or beat, they were all positive. We haven't had a negative one since 2010, so that's a 7-year streak. So a couple of streaks ending right there. But the big part of the payrolls number was the wage gains. A December rate hike by the Fed is all but assured now, with an increase in wages of 2.9% year over year. That gives the Fed cover, and it gives them runway to actually go through with this rate hike. Goldman Sachs put out a note saying they were all but assured that there was going to be a rate hike in December. The CME Fed Watch tool popped up above 90% probability of a December rate hike, pulled back a little bit, ended up in the 80s, but that's pretty good when you see it above 80%. Again, it's all but assured that there's going to be that rate hike. But the interesting piece of data there is we've now got March of 2018 priced for a second rate hike, which would be the first of 2018, but a second of the ones I'm talking about. That's now priced above 30%. We hadn't seen that above single digits in the last few weeks. So now we're starting to price in 2 rate hikes. Again, needs to get above 50% before you can fairly say that it's priced in, but that bump from single digits up to 30% happened pretty rapidly. So we got a lot of Fed speakers. Most of them still say it's appropriate. The tapering has begun, or rather the balance sheet normalization has begun. And if the rate hikes begin, could see continued pressure in terms of making new highs in the S&P futures. This is Bob Iaccino talking S&P futures from the CME Group trading floor in Chicago.